welcome to Grid Knoxville. We're so glad y'all are here. Thank you for joining us. I am Justin Myers, and this is my partner in crime, Cory King. Cory, what's Grid? Walk us through. What's our next slide here, man?
Yeah, man, absolutely. Let's kind of dive into it. So Grid, right, is our global real estate community. We're kind of built by investors, for investors, right? We are not. I would like to preface this too, like we're not gurus, right? We're just active investors in here. We're not here to kind of talk at you. This is an active conversation, so we really like to engage in dialogue. If you're new to this, we're gonna help kind of bring you through this journey. If you've done this 100 times, we wanna learn from you, right? So please actively like share your experiences, share your knowledge, share some wins, share some challenges. This is really just a place for people to share information and connect and do some deals.
Yes, and this is a really powerful, truly global network, right? I know we're just sitting here in Knoxville, the next one, but we just got back. I was in California, family reunion, just sitting there, and there's guys like, oh, that guy's got a $30 million net worth, and he built it like going into like some of the roughest parts of LA County buying property, and he's just hanging out with us at our happy hour, right? So if you're part of this network, plug in. We can get you connected anywhere in the country. There's 30,000 people in there, and everyone that I've met has the same ethos, right? They are here to collaborate, and they're here to learn from it. So, which speaks to our mission, right? We want to connect, learn from, collaborate with like-minded people, and build wealth, right? And why do we want to do that? We want to create impact, right? This is a total meritocracy, right? There's a bunch of agents in here as well. We get to open the door to creating generational wealth for people. This is open to anyone, right? And I've met, I don't know about you, Cory, I've met many investors who scraped their way through high school who are crushing it.
Absolutely.
From every walk of life.
Yeah. One of them,
yeah,
for sure.
No, exactly. So that's what we're here. That's what our goal is. So we want to get to know you, want to connect with you. Please sign in so we know you're here, so we got your information, right? So we can stay in touch. We want to share some deals with you. We want to get to know you, take you to coffee and find out what you're looking to do and see how we can connect you with people in our network.
We are definitely, like I said, we welcome everybody here from all experience levels. So again, if you're brand new to this, all the way to you've done this hundreds and hundreds of times, we all want to connect. We're definitely all lifelong learners, kind of keeping a white belt mentality through everything in terms of how can I always learn and be better, because I certainly don't know everything. That's my job, to try to help connect myself and connect others, right, with those who do know and have kind of gone that way before. So we're very excited for all that.
Right? Love it. All right, so who are we? Yes. My name is Justin Myers. I am partners with Cory King. We are actually the co-founders of Casa Knoxville. So we're very excited. We're realtors, we're agents, we're investors. I'm the president of our local young professionals group for Keller Williams, and I am really passionate about training and educating. That's who I am. I'm looking for some owner finance deals myself, so I'm really excited about this class we're teaching today. Cory, who are you?
I would be Cory King, right? I'm a local real estate agent, investor, somebody who really is just also a lifelong learner, passionate about sharing with other people, sharing my experiences, challenges I've had along the way, right?
Yeah.
So I'm definitely a big believer in that we certainly can learn from successes. We also really learn from challenges that others kind of go through, and how we can share those stories and all connect and learn and grow from that.
Yeah, so I saw something recently that I really love. It says, a fool learns from his own mistakes, a wise man learns from the mistake of others, and the wisest learns from the success of others. So we've got two bases covered. I can tell you everything not to do along the path and every mistake that I've made. And we can talk about how do you come out of having a negative worth to getting to sustainability. And Cory can talk about how do you do the right things and house hack and get to having $1 million net worth by like steady grinding and
It's kind of a nice duality.
Oh yes,
right?
It's fantastic. So we do it together. So real quick, we've thought about this. Doing these, couple different things we want to do here, and I think it might work a little easier. So we want to get right to the meat. We got tons of time for networking here. Come on in, man. Grab a seat. Yeah, there's plenty of room. You can sit right next to Sandy. She doesn't bite. Yes. So, we're gonna poll the room really quickly, and then we're gonna go around and give actual under 30-second elevator pitches. Cory's gonna hit the gong if we don't, because he's the enforcer here. So, who in this room is an investor? Awesome. Okay. Who's a real estate agent? Great. Who's got a deal to shop right now? You got some? Vinny's being shy. Vinny's got deals.
Yeah.
Put your hand up there.
Yeah.
Who's got cash to fund a deal? Anybody got some cash to fund a deal? Look around. Raise your hands high, guys. This is the part where we connect. Awesome. Thank you. All right. Who's a vendor that's got a service that we might need? Yeah. We got Noah. We got Peter. A couple other guys. Fantastic. Okay. So take a look around. Those are the people that you want to connect with after. We're going to go through really quickly. We're going to start with our guy Jeremiah. Is just who you are, what do you do, and who are you looking to meet today?
You guys doing, I'm turning my homes, investor, wholesaler, I'm just here to learn more about seller finance.
Awesome. Who are you looking to meet today, Jeremiah?
Whew, I don't know,
Okay.
everyone.
Happy to be in the room. I love it. Amber.
Hi guys, I'm Amber Robinson. I am a MRP real estate agent that's for the military community, and I'm just here to learn and network.
Good. Glad you're here. Sean.
How's everybody doing? My name's Sean. I'm an investor and a gator lender, and I'm looking to connect with realtors, other wholesalers, other investors.
I love it. Jade, you're up.
Hey everybody, I'm Jade. I'm a real estate agent. I work with Cory and Justin. Also an investor. I have an investment property out in Newmarket. And I'm just looking to meet other agents, other investors, just trying to network and learn from everyone.
Awesome.
My name is Tobias. I'm a real estate agent here in Knoxville. I specialize in historic homes and managing investors' portfolios. I closed on my first investment property this Friday.
Hey, let's go.
Let's go.
Already looking for another one. And I need to know like-minded people that want to focus on the same thing that I do, which is investing in South Knoxville, East Knoxville, and North Knoxville.
Oh my good. Well,
Love it.
let's cue somebody up right on time. Nikita Hudson, tell us who you are, because Tobias needs to know you.
Oh, I know Nikita.
All right, well, don't step on it. It's a great intro.
I love Nikita.
Nikita, who? Yes.
I'm Nikita Hudson. I'm a real estate agent, very passionate also about the East Knoxville community. And my main focus is networking. I need you people with money. And just learning more about the process. I have one property, but it's not quite an investment yet. And just looking to learn more so I can be an example to my family and my community. So.
And ask Nikita afterwards when we're networking about don't sell grandma's house. It's something you're gonna want to hear about. It's really cool.
Yeah.
Peter.
Peter Howes. I am a home inspector, and I'm here to network and actually learn about the process of investing, because it is something that I am looking for in my wheelhouse in the future.
Good, glad to have you.
Hi everyone, my name is Prasanna Date. I'm a scientist at the Oak Ridge National Lab, and I wanted to learn more about real estate investing, and I found this on Meetup, so came here through that, and I would like to start investing. I already have a home where I'm living, but looking to purchase investment properties and stuff.
You are in the right place. We're so glad to have you.
Hello, my name is Will Cochran. I'm a real estate agent. Here to network, learn some stuff, and find some deals for my clients.
Good stuff.
I'm Joel Reyes. I'm a real estate agent. I'm here to learn about subject to and network.
Glad you're here, Joel.
Steven, I'm an investor with two so far. Really interested in seller financing, except so far it's been like a brick wall. So if you all know anything that I can learn on that, I would love to learn it. And this guy told me to show up, so I did.
Good. This is awesome.
Love to have you.
My name is Vinchelle Mobley, and I'm gonna be an investor and I hope to get my first property this year.
I'm glad
And
you're
this is
here,
my
Michelle.
daughter.
My name is Kanara Rowan. After high school, I plan on becoming a real estate agent, and today I'm here.
She's gonna graduate early.
You are playing the game on easy mode. Because time's on your side,
For real.
really. Like, you don't understand if you just get in the game young and then you have time on your side, it is like impossible not to be insanely successful. Yeah.
Super true. I'm Chris Davis. I'm a private lender. I run Approach Lending in Knoxville, so I'd love to network with anyone who needs money. So reach out.
Love it. Love to have you.
My name's Robert Gillingham. My wife and I relocated here about 2 years ago from Naples, Florida. I'm a licensed roofing contractor in the state. Went to real estate school a couple years ago. I never actually sat for the exam just because I wanted a background and how the whole process worked. And yeah, looking to network, meet some people, and make some more money with the money.
I'm
when I
so
get out
glad
of
you
Florida.
came, man. I'm glad
Yeah,
you had.
that's awesome.
Yeah.
I'm Crystal Clark. I just retired from the military in January and relocated here from the DC area. I am an accidental investor. I kind of stumbled my way into it a couple years back, and it was a great experience. Sold that property, so I'm looking forward to getting into that again. For networking purposes, I'm most interested in getting to know contractors and private lenders. So some of you money folks probably talk later. But I'm just excited to be here and be part of the Knoxville community.
Love it.
Hi everyone, I'm Denise Gutiao. I'm currently an agent with Real Broker. I am hoping that I'll be an investor also one day, but as of right now, I'm just looking to learn more and so that I can just be a better partner and serve my clients better and then help my partner
Love it.
and understand the process, you know.
That's awesome. Glad you're here. No.
I'm Noah Jew. I'm a contractor specializing in screens, plus window screens, screen doors, and screen and porches. I'm here to just connect with anybody who needs screens. Property managers, realtors, everybody in this room pretty much at some point needs a screen worked on. And yeah, I just love listening to these guys talk about stuff. They're so knowledgeable on stuff. That's why I'm here.
Love to have you. Solid work too. I can
Please
totally vouch
follow
for.
me around. I love that. Thank you.
Yeah.
Thank you. That's great.
I'm Krista Bentley. I'm a real estate agent here in Keller Williams. I wanted to learn a little bit about investing with the owner financing. I'd love to network with everyone. I would like to know if someone is investing out of state right now, because that's kind of my goal. And yeah, thank you.
Glad you're here.
Right here. Sandy.
Hey, I'm Sandy. This is my second grid meeting. I am coming to learn. You know, I'd like to kind of figure out what it's all about and see if I want to jump in there with both feet and do it. I want to, you know, a passive income as I move toward retirement, which is not too far away. So, you know, I'm just learning and networking with people, and probably would like to talk to some of you cash guys too, so that'd be helpful. Thank you.
Hi, my name's Rod Terrell. I wear two hats. I work for 58 Foundation as a foundation specialist. I'm also an investor. I've got a small portfolio. I just closed on my 7th property last week. It was a seller financing deal, so I'm hoping to learn how to get better at that. Yeah.
Love it. That's
Ooh,
awesome.
I
Congrats
wanna
on
hear
that.
about
Yeah.
this. We're gonna call you here in a minute.
Nick Wilson, first grid meeting, would be potentially a new investment for my wife and I. Don't have a lot of real estate knowledge, so we're here to learn and hopefully network with you guys and figure out how we can get involved in the real estate in Knoxville.
Love it. Welcome.
David Gainey, just here to learn and network.
Thanks, David.
Thanks, David.
Vinny, primarily wholesale. We bought properties, flipped properties. Just really looking for any active buyers. Anybody looking for an active property right now? Definitely love to connect. We've done some seller finance deals and wholesale those as well. So those are all an option as well.
Glad you're here, Benny.
Glad you're here, man. Some legal stuff.
Disclaimer
Yeah.
stuff. All right. So, if you are a real estate agent, the state wants us to all make it very clear that we have a very limited scope. We are not licensed investment advisors, tax professionals, home inspectors, attorneys, really just experts on marketing houses and negotiating in a fiduciary capacity if you've got a signed agreement. What does that all mean? Check everything, trust but verify, right? Run this, use this information at your own risk. We're gonna provide some information, but obviously, like investing does have risk involved, and we at Grid are not liable. Awesome.
Yep.
Cory.
That's our goal, right? Let's talk.
Yes.
Let's start talking about some of these strategies. I think it's kind of good to start this off with a little bit of kind of mindset in all this, right? We're coming to all these solutions to be a problem solver at the end of the day, right? Oftentimes these are as the economy continues to kind of shift and move around. There's going to be some people that are going to kind of fall behind on their mortgages, run into some financial challenges. So understanding how a lot of these tools work and how to structure some of these creative deals is a very, very valuable skill to understand, right? This is essentially worth millions of dollars over the course of your real estate investing career by understanding how these tools can work and how to work on them. So today we're going to be talking about 3 of them: owner financing, subject to, and then lease options, and how all of these tools can work and can be additional tools in your tool belt when it comes to investing in real estate.
If you are, we've got a lot of agents in the room, right? Which I love having agents in the room, because once you're empowered, you become some of the most powerful investors, you know, in the market, right? I think Vinny's a great example of an agent who's also an investor, right? Who focuses and plays that game at a high level. Pay attention to some of these tools, because these are tools that you should have in your toolkit when I'm sitting down and consulting with someone about whether to sell. Right? These are some things that can make some deals work when it doesn't make sense to sell. We're going to talk about these. There's some ways to get creative, and there's even some ways to, like, what are you doing with this money you sell? Like, would it be helpful if we could convert this into, right, turn your equity into a cash flowing asset for you? Like, that's, some of these things are not only advantageous for us as buyers, but they make a lot of sense for sellers too, and they can be real win-wins, which we love, right?
Yeah,
awesome.
Absolutely. So
what's owner financing, Cory?
So, owner financing, right, at a very just kind of base level, is just where the property owner who owns a property completely outright then gets to act as the bank as well and go ahead and kind of set their price and terms to then kind of sell that property over somebody.
Yeah.
At a better rate or at a rate that they can make work, less cash out of your pocket.
Yeah, I love it. I think you nailed it, man. So we'll go to the next one. What's in it for skip ahead, we'll come back. What's in it for the seller? Vinny, you just did an owner financing deal. Why does the seller want to do owner financing in your experience?
You know, sometimes it could be, you know, older landlords that are used to the mailbox money and they just want that check in the mail every week, you know, or every month rather.
Yep.
Sometimes it comes down to when they want to retire and they want to structure it around retirement, and that's when they get their final payout. There's tax advantages. You could avoid capital gains.
Vinny's doing our work for us. Yeah, he's covering it. Yeah.
There's a few different reasons why somebody want to do that. And work with you on it for sure.
Sure. So I want everyone to hear that, right? There's reasons why this other party on the side, why it may make very good sense for them, and it's super advantageous for us as a buyer.
You touched on it too. It's also sometimes the sellers want to just go and put it in the stock market, and I'm just like, well, why don't you look at the house as your, you know, as your investment and become the bank? You know, level them up. They're going to do the same thing with it.
Anybody in the room interested in passive investing? Would you like to get to a place where you've got passive investments, got mailbox money? If you do this correctly and you find the right partner, like someone who's actually going to take care of the asset, this is about as passive as you can get it. This is like, we just went to the Lifestyle Investor. Justin, if you haven't read that book, Justin McDonald, it's all about speed of capital. And the giants here that I'm seeing, what are they doing? How do I now owner finance myself out of my portfolio where I'm just sitting and being the bank? And they're playing the game of being the bank, holding notes, right? Buying notes, not having actually being able to control an asset without actually doing any of the active work of managing an asset.
A lot of the guys.
The general term for this is land contract, correct?
What's that?
Seller financing.
I haven't heard that term before, but I don't know everything. I'm sure that could be correct.
I'm from originally in Ohio, that's exactly what we call this. And
Awesome.
I was just wondering if anybody else that term might help them understand what
Awesome.
we're talking about.
This is why we have a room, a lot of
Yeah.
smart people in the room.
Yeah, it's a land contract, private purchase from the homeowner.
Sure.
Yeah.
I saw someone else raise a hand. No, cool.
Yeah, big just kind of upside, right, you've kind of touched on is just being able to spread that out, right? As rather than taking like a big income hit and kind of paying a big capital gains tax, if you can stretch that out over a number of years, it's a lot easier to say for somebody to go write off, 12, 20 grand on their taxes and kind of find that and stretch that out a year versus taking a couple $100,000 in one shot.
And a lot of these guys are also guys at where we want to become, right? We
Yeah.
eventually want to be the guys that have the portfolio that in their 70s are looking to retire and slow down. So they look at you as like, that you were me
You're
30,
the-
40
yeah.
years ago. Let me pull you up,
Yeah.
Is cash flow or net worth more important? What do y'all think?
Cash flow.
Anybody on the team with net worth? Yeah, so I think that's something to think about. Just keep that in mind. If we all want to get cash flow, here is a way to transform your equity into cash flow, right?
Yeah, we'll kind of talk on some pros for the buyer.
Yeah, Cory, why would I want to do, why would I, it's almost like, why would I not want to?
Yeah, yeah. I mean, it's really just a solid option all the way around in general. You've got oftentimes like lower closing costs. I mean, all these things are essentially negotiable when it comes to you're actually setting out your price and your terms, and that's going to be between both buyer and seller when it comes to working that out. So you've got the ability to actually purchase a home or take over a property without necessarily even going through the additional hurdles that you're going to run through a traditional lender, right? So less like little no credit checks, at times little to no money down can be part of the deal.
Anybody in the room got some unusual income to verify? Am I the only one in this room, right? Here's a great way to go acquire assets where you don't have to worry about a DSCR loan because you're at 7 now, so good luck getting regular financing. Or you're 1099, you had a killer year as an agent, right? But I haven't been in the job for 2 years, so what am I gonna do? I've launched this screen company and I'm very successful at writing everything off. IRS, no Jew. No. No. So I'm running an asset, I'm not showing a ton on there and I'm playing that game. This is a great way, it's a great tool for us to, right? It's another win-win.
Mm-hmm.
Yeah.
Yeah. Kind of structure like a little example
Mhm.
around all this too, right? So kind of wrote out as a kind of a sample example. You got a seller who's got a property they own completely outright. They own it completely free and clear, and say receiving multiple offers on it, and one of those offers could have been a 20% above kind of what your listing price on that or your asking price on that. Buyer can then come in, put say 20% down, agree to finance that for 5 years at a 6% interest rate, and they amortize that over 30, or 40 or 50. I mean, again, this is all kind of negotiable on how you structure that deal. But in this example, we just kind of structured it on a 30-year amortization schedule, but it's got a balloon in 5. So you've got about 5 years. Your payment is going to be based on like a 30-year note, but you're going to have a balloon to either like kind of pay that person off or refinance that in that kind of 5-year term, right? From there, right, you just kind of go through and have an attorney drafting up a promissory note, which is going to kind of amortize and structure all that out. Title company can kind of go ahead and take care of all the rest, making sure that we're actually passing on a clear marketable title, right? Very straightforward, easy win-win deal for buyer and seller in that scenario, where the seller is actually able to get a higher price and a higher value because the terms were flexible there as well, right?
Would anyone like to learn how to actually do this? Like, how does this actually work? Yes. Yeah, great. So there's a guy in town who's a good friend of mine long before he became a real estate investor, Jason McDaniel. Mm-hmm. Jason runs another real estate investor in town, mentors some guys, great guy. Jason's helped travel in the world because he was so successful with this strategy. He's acquired 40 properties using this strategy, and he's paid no more than $5,000 down. At times he's been able to acquire with 0% interest. Mm-hmm. So I got Jason on the phone the other night on WhatsApp, and we had a conversation. I said, let's walk through, what do you look for? So here's the tips that we went through, right? So there's a couple things you should look at, right? Why does it make sense? We already talked about what makes sense for the seller, right? The seller, so typical scenario, I'm coming out there, I'm writing an offer, let's say we're doing the usual, right? 70%. because I gotta be able to write 70% of the asset, because I gotta be able to fix this thing up, there's some meat on the bone. That's what I can do cash for you. Peter, you're really, really stuck on a number, right? You've gotta have 200,000. 200,000 is important to you. You don't care, you need to hit 200,000. So here's where the win-win is. Hey, Peter, I can give you 200,000 if you let me set the terms. Typically, they're gonna ask you, what are terms, right? And that's when you're gonna say, hey, borrow this from Pace Morby. I'm gonna promote you, right? From being a landlord to being a lender. So look, I can give you those terms if you let me, right, spread this out. What you do then, pull out, if you plan on paying interest in this scenario, and we'll talk about how you go for a zero interest scenario, what that actually looks like. If they're going to pay interest, pull out a mortgage calculator, right? Whatever the terms you're gonna agree on. Let's say it's 6%, right? I ran some numbers on this. So I could afford to pay you 80, that's what it really makes sense for. That's what everyone else here is gonna give you on this deal, because that's what I have to buy it for it to be a workable deal as an investor. Well, I can actually give you 90K if you give me some terms, and here's what we're gonna do. It's gonna be 6%. Let's say I put $5,000 down. At 6% amortized over 30 years, that's $183,000 that person puts in their pocket. I can pay you $183,000 if you wanna take payments. That's why people wanna take owner financing. Does that make sense to everyone? Why you would really want, you should be looking at owner financing if you don't need all that cash? Why would you not want to make more money over time and collect that interest? What else are you going to put it into an asset? You're going to put it in the stock market, which is fantastic until Wall Street blows up the market every 10 years and you lose half of your portfolio, right?
Yeah, solid play.
Yeah,
Very
really,
good.
really solid play. So let's
Hard
see.
to say no.
Yeah, no,
Hard
what
to
is
say
that?
no to double my money.
That's a scenario you can run in everyone, to be clear. Like, right, that makes logical sense of once you've negotiated a price, you could just ask, are you open to seller financing? What does that mean? Hey, what are you gonna do with this money? Open that conversation. That's how he did this 40 times. The scenario you're looking for where you can get where zero interest is possible or even likely is if someone is just stuck on an impossible number that doesn't make sense, right? And maybe even a number they're not gonna get if they go to market. Have we all seen these where the people just, it doesn't matter what you say, they just know their property's worth a certain amount of money. It doesn't matter how you explain it to them. I can't be the only one who's had that conversation. Trying to help someone from like, as a fiduciary to be like, walk me through, show me how to do this, you know, like teach me your ways. I want to be a better salesperson. How are we gonna sell over all the comps? Well, we can outpace the market if you're willing to give terms, right? I can give you a higher number and, you know, whatever number you're looking for. You want to go too high above appraised value if you give me terms. And that's a scenario where 0% interest does make a lot of sense because you say, hey, I'm going to give you your numbers. We're going to amortize this out. Just ask for it. Just propose it, right?
Mm-hmm.
Works really, really simply, right?
Yeah. Unless they really need a lot of that cash, like
yeah,
right then and there.
So
and that's flexible.
I love the way Jason said this. He's like, unless you need this, like need this right now, like an emergency. Like your mama's got to go to the hospital because she's got cancer. You'd be crazy not to sell her finance. Why would you? I'm going to give you more money than you're ever going to get on the market. This is a win-win. So if you need cash, I can make that happen, right? In that case, right, we've got someone like Chris. We've got also a couple hands go over there. They're can finance a deal for you. Any questions? Does that make sense to everybody?
Yeah. Awesome. I want to hear a little bit more about it. You just kind of wrap one up.
Yeah, how'd that go down?
Tell us a little bit about it.
I still have pages out of Jason's book, honestly.
Yeah.
So went and looked at a property, and you know the seller, he wanted XYZ, and I told him I can offer you a cash offer, I can offer you a terms offer. And when I gave him the cash offer, he didn't kicked me out of the house. But that's where we were at with this market. So structured it on a 25-year note, 5% interest, no balloon payment. Did have to put 10% down, but it was worth it to me to develop that relationship with this individual, and I got that property at below. I can get that interest rate right now.
Yeah.
So
Yeah. And so we talk a lot about win-wins. We talk a lot about being ethical, right? And the reason why I find is like when I do things, I started my career as a mortgage broker, and I could never figure it out because I was like, I can't figure out what the right amount of a jerk is to be. Because I see some people doing some wild stuff. There's something called Section 32, which was you could only have, the max closing costs on a mortgage were 8%. And that was the goal we were hitting, was 8% in closing costs on these refinances, because the rates were so crazy and the appreciation was so nuts. You just keep refinancing the same people and dangle 50K for them, and they weren't paying attention to the fact they were paying just criminal amounts of interest. I could just never figure this out. I wasn't any good at it. In this case, you know, if we're acting as fiduciaries, if we're looking for win-win, we're being problem solvers, the great thing about this is you can look someone in the eyes and, hey, here's what's gonna happen, right? I'm gonna take over this. I'm gonna fix up the kitchen. I'm gonna put someone nice in here. You're gonna get your money. If I don't pay it, you get the house back with all the improvements.
That was a big concern initially, because this was their first seller financing deal, and they were like, well, you know, like where's your skin in the game, and what happens if, you know,
Sure.
X, Y, Z, and it was like, look, you're getting a remodeled kitchen, a new roof, new HVAC, and if I stop paying, you get an upgraded house.
Yeah.
And so it worked out.
And one of the things from just being friends and watching Jason for all these years of being very upfront, like, hey, this is a win-win for me because I'm gonna come in here, I've got some renovations planned. I'll send you pictures when I'm done. This, I can give you more because now I can use my cash to fix the house up. And that led right into that script of like walking them through, like, hey, you're gonna keep this place. It's gonna be, when I'm done, it's gonna be way nicer, and he does really nice. The end part of that is when Jason fixes stuff up, he does a really nice home. He takes it top of the line because he thinks it's less maintenance, you get a better tenant, right? He's not doing a slumlord fix. Cool.
Yeah, go over it nice. And
Yes.
make a nice property, makes it easy to rent.
Ready for the next one, Cory?
Absolutely.
Tell us about subject to, man.
Sub two,
What does
right?
that even mean? What does subject to mean?
So this is certainly like the big topic going around right now, right? Is like subject to, and really, in essence, what that is you're buying a home subject to their existing mortgage. So essentially, as the buyer, I'm going ahead and assuming and taking over someone's current mortgage payments in exchange for the deed to the property, right? Which gives me then control over the property. I can then go ahead and start fixing it up. I can start cash flowing this asset. And a lot of times these are in situations where people just, they need to be out of it and they need to be out of it right now, right? This is a pain point for them. I've got to move. It doesn't quite make sense for them maybe even necessarily sell, because we're talking about a thin margin here. There could be a very thin margin there where they can't necessarily take it to an agent and sell it, because with commissions, things like that, they might be in like a net loss on it all. Or if they bought property 6 months ago at arguably the height of the market, and then you try to go sell now, right? We might be at a position where we can just get out of this. But if you really just need to kind of let go of the property, let go of the payments, subject to is a great option there to have.
Mm-hmm.
Yeah, absolutely, great option to have. So like,
Yeah, Cory, why? So, actually, you asked me this. I want to.
yeah, for sure, absolutely. So like, why would a seller do that?
Yeah, so why would a seller do that? So there's a couple different reasons why a seller would do that, right? And we're gonna go through two of them. One is it's a margin where the deal is too thin. We've all seen those margins, right? Where someone wants, let's say, like 90% of ARV, and there's just no room. There's no room for it to make sense for anyone. An investor can't come in, you can't come in. It doesn't really make even sense for like a buyer to come in, right? There's just not, it's not gonna make sense for somebody. That's that, hey, I wanna get out of this property. This is the only way I can get out of this asset. And this is a way out. That's ideal, because that's someone, there is no other, there may not even be enough money on this deal to pay realtor commissions, right? Hey, I just moved in here, I've got to relocate again, this isn't working out, the divorce isn't working out, my allergies are killing me, whatever, right? I miss the beach.
I miss garbage day.
Yeah. So I've got to sell, but I can't sell. And we're gonna go into this now. Like people have all been living in an environment where, what do you mean the home hasn't appreciated? Like, oh no, it's flat, and now there's closing costs, and I bought with 3.5% down. There's no room to get out of this property. That's where subject to, as an agent, when you're having this, keep this in mind. That may be something where you've got a solution where it's, hey, I am coming, I know an investor, I could structure a deal, right? I have a solution for you that could save you, because I can't list your home. We don't have a solution for you, right? It's also, and we're gonna go through scenarios, it can just make sense for someone that's looking to get out of an asset in a different one. Anybody come to our how to identify motivated sellers class? Remember that one we talked about, circumstance and emotion? Go watch that one on YouTube, right? So we just talked about circumstance of being jammed up. Now we're gonna talk about another circumstance or emotion. Like, I'm stuck in this property, please come take it off my hands. I don't know how to get out of it, it's too much to take. So,
Yeah.
what does it do if you're a seller, Cory?
Yeah, so a seller, like, ultimately it's just, again, solving a problem that someone has. Ultimately, this is something where they need to get the money that they need, but sometimes it's gonna be like in a delayed fashion, because typically, subject to deals, you're gonna be holding for a longer time. These aren't necessarily deals that you're gonna be in and out of, right? This person's gonna have to probably accept that it's gonna be a delayed payment at the end, but they really are looking for more, the relief of getting out of this payment and out of managing this property is gonna be a lot stronger for them than necessarily taking cash right now, right? Certainly can be a great situation for somebody if they're looking to just kind of even build back their credit. You've gotten back to a point, because now you're taking over this asset, and you're gonna keep making that payment and servicing that debt for them on their behalf, essentially, which is gonna keep those payments, gonna keep showing up for them because they're still originally holding the note, and you're gonna actually improve this person's credit over the long term, rather than necessarily taking a cash payment like right away, right, which doesn't really fix that problem for them.
Yeah.
Yeah.
So what do they do? So you basically take over the payment. How do they go find another place to live if they already are on a mortgage for a house?
Sure, so like if that's gonna be impacting, say, their DTI ultimately, and they wanna go through that, I was actually talking with a lender earlier today about that. There's one scenario you can look at, right, because you're gonna end up taking this and putting this property into a trust is probably one of the strongest ways to actually do that, and assigning, say, myself as the trustee, because from there, right, you can go ahead and get like a lease in place, right, with that person there still as a trustee, they're still, or in part of the trust, they're still tied to it. Once you have like a lease in place on a property, I can then go to a lender, and even though that lease hasn't even started, they'll count up to, it's like 70-75% of that income as income for you, as though it's already there. So if I go have a lease signed for this property that say it's gonna start in 30 days, 60 days, 90 days, they're still gonna go, a lender's gonna take that and go, okay, great. And that starts to kind of absolve that person against their DTI. Now they can move on and go out and rent a new apartment, go buy something else. Like, you're just kind of helping cover that, right? Because you're still gonna be then coming in and servicing the debt on it. And through having a lease on it, a lender should be able to go ahead and, in underwriting, clear that off of their DTI.
Everyone track that just like any other, investment property, right? Yeah, cool.
I worked 2 subject twos, and one was commercial, one was residential. In both cases, it was a rent back. The new investor rented it back to the previous owner, and that was on the commercial deal and the residential. So
Why would, I don't understand, why would
they
you
don't,
do that?
they want to get from under that mortgage, and they won't rather pay rent, so they want not tied, and then they're looking, and so they don't have to move out instantly.
Well, the way to think about this stuff, I would say the flip side is like, what's the advantage to some of these traditional methods other than the fact that they're traditional? Right? Everything, look, I'm in an industry where people are trying to cut me out because I'm the middleman,
It's
right?
always the traditional people making the money.
No, but that's it, right? Every scenario is, right, investors, I don't
Think
wanna work.
outside the box.
Yep, I don't wanna work, I called somebody in a portfolio, he says, doesn't work with agents, and I was like, he has sold 90 houses, I was calling this guy in Middle Tennessee, and I was like, you don't like, so if I bring you your number, you don't wanna work with agents, or you don't wanna pay, because I'm not calling to ask for your money, I wanna come buy 90 properties. Like, I'll figure out how to get paid on my end, don't worry about it. Yeah, so I think there's some advantages when you start using these strategies like consistently, why would you not want to? Cory, what do you do with and I'm excited to get to the scenario, what do you do for a buyer? Like, why would I wanna use this?
So this is one of those options, right, where if you as the buyer going in this, you don't really need to get traditional financing in that, because you're going ahead and just taking over someone's mortgage at that point. Oftentimes, especially now, if you go to somebody that just bought in the last couple of years, you're looking at potentially 2, 3, 4% interest rates. That's an asset. I mean, at the end of the day, I would say like that person who has that mortgage has an asset. That mortgage becomes kind of the asset in addition to the house. So being able to go take over that is awesome. Then you control it, right? You own the home.
And you can make deals work that don't make sense without, like, there's a lot of deals right now that don't make sense with current financing, which I agree. But they certainly would make sense if you could you had a time machine to go back and access some 3.5% interest rates.
Yeah. Yeah.
How do you get the lien holders to go along with this plan?
We'll get there.
Okay.
Great question.
Yeah.
I love it.
Yeah, that's a
Yep.
good one for sure. And it just gives you an ability to kind of build up your equity a lot quicker as well, right? Because you're taking over somebody's amortization schedule, and it might be something that you just kind of, that they got under contract recently, they bought just a few years ago, or they might already be 15 years into this note that you're taking over, and now largely those payments are even going towards principal more so than they are actually the original interest that was done on that loan, and it's helping you build up that equity even faster, because a lot of those payments you're making now are just hammering right at that principal.
Who's looked at their mortgage statement recently? How much of your statement is actually going towards, how much principal are you paying down on your payment right now? Here's some numbers.
Nothing when you refinance the past few years.
Yeah.
No, really, like is it
Yeah.
$100? Like how much is going towards your principal on your payment?
Couple hundred a month.
Yeah, right?
For me, it's a couple
Max.
hundred a month, yeah.
Depends on the loan you've had.
Depends on where you're at with it, yeah.
That's what I was asking. So
And
most
so
people.
right now, I'm at like 60% is going.
How deep are you in the amortization schedule?
I've been paying ahead, so we're looking for a 20-year, but we're 11 in.
So you're 11 in. Fantastic. That's what we're looking for. Is can I come in and take that, and now 60% of these payments are hammering down principal instead of 75, 90 are going towards interest because it's front loaded, right? The bank gets paid first in an amortization schedule. That's the win-win where you can get the asset faster. That's where it really starts to get interesting.
Yeah.
Yes.
Yeah.
So risks.
The risk in all this.
Who's seen this? Who does it make anybody nervous?
Yeah. So there is a chance, right? Every contract that you're writing through, all your loan documents buried in there is going to be what's called like a due on sale clause. And so a lender at any point in time reserves the right, if they see like a change in ownership on this, they get that deed transfer, they can say, well, hey, this property sold, and they can go ahead and call that note due then, right? It's kind of like the boogeyman in all this of like what happens or how did that happen. I'll say like what I've seen, like how often does that happen? Very little. I mean, in reality, most lenders just want to make sure that they're getting paid and they're not necessarily looking at that underlying deed of like who's owning this. They're just seeing the debt get serviced every single month or that's been caught up and they're good with
So let's do a thought experiment on this. Has anybody in the room bought a property and moved it into an LLC? Yeah? Let's see some hands raised. Chris, did the bank call your note when you put it in an LLC?
They have not, but they could call the note.
Yep.
And there's reasons why they might.
Yep.
Well,
What are those?
Well, if you get into kind of the situation we're in now, where banks are tightening, because they're highly regulated, and which means they have a balance sheet that gets audited a lot. And so they'll look at the loans and they'll see which ones the auditors will be pissed off about, really. And so they'll look for any way out to call a bad loan. So they would look for, hey, this guy has technical default. His loan is, he might be paying, but they may still say it's a bad loan. And they could call it. It's very, very rare though. So we've done one subject to loan this year. My allergies are killing me, so it's hard to talk right now. We've done one subject to loan this year where it got called, actually. And so they came to us because they had like 10 days to close on the deal.
Yep.
So that's not to scare you, because you should absolutely try to do subject to seller financing, but just make sure you have, someone in your back pocket.
And
strategies.
yeah, I think like anything else, like can you wholesale and have a back out clause and screw the A buyer in the A to B to C transaction? Sure. I would much prefer if you're doing wholesale deals that you have the ability to close and you've got some backup financing if you're not able to do that, right? Yeah. That's a win-win for everybody. So you raise your hand, you put properties into LLC?
Yeah.
Have they gotten called?
Nope. But I called my bank to check in on it.
Sure.
And they were cool with it because I waited the year. That was their stipulations were 1 year of having the loan. And then you didn't have, whoever's on the deed already has to be on the LLC. And they were cool with it.
Yeah. So what we've seen, there's a couple ways you can do this this is not necessarily a red flag when you talk to people all over the country that are doing this statistically. Like, this is why this is a topic, like truly, like trust but verify, because it happens. Like stuff stuff does happen. If you move it into a trust, that's not necessarily an automatic red flag, right? If you name that LLC, the subject property, that's a pretty common, right? Investors do that all the time. 123 Banana Street LLC for 123 Banana Street. That's not necessarily going to trigger an underwriter as long as they're still receiving payments. And just having a backup strategy, which that's one way to get around that. That seems to work because there's people that are doing this. We were in a room full of real estate investors, and when they asked who was moving a property into LLC, the majority of the hands went up, right? And these are people that are investing in multiple properties. That's a very, very common practice. Yeah.
Yeah, I don't want to. This probably sound like I'm trying to scare everyone away.
No, it's. I mean, you got to my end point for me. Yeah.
I would probably the biggest risk you have in a subject to deal is make sure your documentation is rock solid, because I've seen the seller of the deal who's technically paying your mortgage for you call loans. So if your documentation's not good, like courts don't look upon seller financing subject to deals very highly in general.
So you're saying use LegalZoom, right? Why would you pay an attorney? I don't pay a realtor. Why would I pay an attorney for documents?
They're much more sophisticated today, right?
Sure.
It's less of a problem, but these ones that we see from like the 70s and 80s where people were doing a ton of this stuff, man, like their loan documents are being questioned a lot of the time in court. Yeah. So just make sure you have good stuff.
Yeah, so let's walk through. So got to sit in a room, it was really fun. Rob that runs Grid. Rob's gonna be here next on Friday, by the way, if anybody wants to come. He's gonna be here in this office on March 10th, get with me. Really, really sharp guy, probably one of the best communicators in the country. I said probably is one of the best communicators in the country on wealth. Regularly conversations with Bigger Pockets. He's been testing like their lead system for him. Really interesting guy. So he ran through this deal for us. So Cory, walk us. We'll take some turns here, but I'll let you run through the numbers and.
Sure. So kind of some numbers on this sample deal that it kind of gave us was seller had gotten behind. They had a first loan. There was about $90K at 2%. Again, this is where like some of those interest rates can be really, really sweet when you go back on some of these sub-2 loans. They were about $10K behind on that first loan. They had a secondary loan out there that was about, well, it started around like 35, 45 grand, and then they had
It was originally 30 at 15%, and then
Yeah.
it went to 75,000 in 5 years.
Seller hadn't paid that note, right?
So-
Over that 5-year period. So
Yeah.
that went from 30 to 75K.
So they're 55K in the hole, right? They're behind 55,000 in payments.
Mm-hmm.
Yep.
Property's starting to hit pre-foreclosure.
Credit's totally wrecked, right?
Looked at it, needed about 60 grand worth of work with kind of that ARV of around $325,000. And so
that's kind of if we go back to that real fast.
Oh, sure.
No, it's kind of a thin deal when you're looking at it there, right? So like to actually acquire the property conventionally and pay that off, right? We're looking at 165,000 in mortgages. It needs 60K. It's 225. Roll some closing costs in, and your ARV is going to be 325. Like, you kind of make it work, right? Just not really ideal. So you asked why would a seller want to do this? Yeah, let's jump to the next one because I think it's a great thing. How do you talk them into doing that, right?
Yep.
Here's the beauty of it. If we talk about the benefits, so there's no foreclosure. That's the biggest thing, right? And I've learned that lesson living through the last crash, negotiating short sales, negotiating for people do not want a foreclosure on your credit. There are some really long-term consequences that jacks you up, right?
Mm-hmm.
There's no deficiency debt, so you're not going to get stuck with the judgment, right? And what we're going to do is, hey, we're going to come in here, we're going to take this over, and we're going to fix your credit for you. Like every single month, this is going to be a positive on your credit. And we can talk about, he didn't mention this. So here's how you do it with the seller. They came in and they got a third-party servicing company. So we're going to hire a third-party servicing company. And if you want to think about this, there are thousands of independent mortgage brokers all over the country, right? And what are they doing? Maybe they've got a wholesale line with the bank. they are acquiring a loan and they're selling that thing off, they're selling their servicing off to someone else. Pretty normal. So we're gonna get a third-party servicing company, we're gonna make payments, and you are gonna get a statement every single month. So we're gonna use third party, just like we're gonna use an attorney to document this.
That's at least, that's how the lender is gonna be serviced or show that they're paid, because there's a whole third-party service that's going ahead and taking that over. And seller gets proof of it every single month. You do not give the seller the money to then pay that debt. I think that's a big no-no right there. Please understand, when you're gonna be doing this, you are not giving the seller that money to then go ahead and have them make that payment, right? You make the payments directly. You have that third-party service that go ahead and actually services that debt, and they can actually send a proof over to the seller of that property that shows that that's getting paid every single month.
Yeah, and here's where this gets really fun. This is really interesting. The second was $75,000. Now, the way, if you've been through a foreclosure before, anybody had to deal with that, short sales, anything like that? Yeah, right. So the way this works in the pre-foreclosure process, they're gonna file a lease pendants eventually, and that's everybody who has a lien. There's a limited period, used to be in the newspaper or something. Come get in line, this is your chance to get paid if you got a mechanic's lien or whoever else. Well, second lender gets screwed in that scenario because the first lender's got privacy, right? Now, in this case, there's equity, so it's not as bad. They're not getting paid anything, right? They haven't been paid it was 5 years since they had a payment. So called up that lender, negotiated a short, just like you were negotiating anything else, and we're able to negotiate, hey, we'll give you $7,500, because right now you have nothing, and they cancel that $75,000 mortgage. And now the deal starts getting really, really juicy and interesting, right? So cool. Here's what it took to get it done. You want to run through the numbers, Cory, and what they had to do to actually practically do that to get the property?
So that was $60K in fix-up work to get up to about $325,000. They were to negotiate that second note down to clear that out. So it cost them $10,000 to bring that first note current, because that's what the seller was originally behind, right? $7,500 to clear out that second note, closing cost of a couple $1,000s. So essentially they're coming out of pocket about $20K in order to come in and actually stabilize that asset and take it over. First position was at 2%, and they're already 15 years into the amortization schedule, which meant 50% of the $900 payment is just going right towards principal. So they're putting in $75,000 to fix it up, make it into an Airbnb, and then collecting.
I'm not that good at math, so I just wanted to hit that. So that's.
Sorry, yeah.
No.
Flying through it.
No, it's exciting. So you got that so far, right? You got to the property with only $20,000. So you controlled an asset for $325,000. It only took $20,000. You were able to keep the first note in place at 2% interest. Does that sound pretty exciting to anybody?
So what, $900 a month payment?
$900 a month payment. 450 of that's going right towards
principal.
Right towards principal. That's awesome. Right? Yeah, cool. I just want to stop that. Cory, go on with the
Yeah.
rest. No.
Appreciate that. Yeah. So all in all, them putting in $75K to fix it up and make it into an Airbnb, and they should be collecting $3,500 to $4,000 a month in rent as an Airbnb.
Right? So what are they doing there? Well, we're stacking a bunch of different, that's why you come to this thing, right? We're learning some basic frameworks. The reason why I think Grid is unique and everything else is we're gonna teach you frameworks where you can explain this to someone else who's not an industry professional. There's other places, if you wanna learn something to, go watch 40 hours of Pace Morby, right?
Yeah.
And dive deep. But we're gonna teach you some frameworks on this, like, here is a way to explain this to a lay person, explain this to someone else so they know what to do. Here's how to have those conversations. Here's some people in the room, right, that have done this, that are, I know because I've talked to them, more than happy to answer questions, call them up, like, hey, walk me through this. And then you layer some of those strategies, right? Like how to do short-term rentals. Cory wrote the curriculum for us.
Mm-hmm.
Yeah.
So I'm guessing you can't find these deals on something like realtor.com or something. So how do you actually find these deals?
So there's a whole grid on how to identify these deals. In this case, right, I'm asked the room, how would you find a deal like this? I've got my answer, but.
Expired listing.
Well, I mean, for this one specifically, right, it's someone who's in pre-foreclosure.
Yeah.
I mean, Zillow used to just, right, so there's there's trigger services for some things like that. There's a way to get those lists, to get that information if someone's in pre-foreclosure.
Yeah.
Zillow used to advertise those all the time because I would get people that were calling me because they thought that a property, there was one HOA in Tampa that's notorious. Like they're constantly, I don't know what was going on in that neighborhood, but they were constantly like in a battle and they were having to file lease pendants to get HOA dues paid. So people would call and be like, can I get a property for $5,000? And I'd be like, I'm gonna call. 1 out of 30 times, that's a warning sign there's something actually going on, and like actually, I stopped paying it because I'm moving or getting divorced. Every other time it was like, yeah, no, my home's worth $400K. Like I'm sick of the HOA. Like whatever. There's some feud going on. So that's a trick. That's one way to get it. Would just be getting access to some of those. What do y'all do that I might be missing?
I mean, I don't really look for pre-foreclosures, but I mean, I'm just pulling lists.
Yeah.
To find properties.
Sure. A lot of this is just having the tools in the toolkit where the opportunity arises. So, the same thing from talking to Jason. He was like, here's the things I look for when I think, okay, I'm pulling out subject 2. I'm pulling out owner financing. For him, it's the real trigger most of the time is thin margins. In this case, what they were doing, if I had to guess from knowing Rob, is they were prospecting with some sort of like we buy houses, like some sort of make offer for instant response that was related to we are solving the problem, right? Of like, we can get you out of this scenario.
We can save you.
Yes. We're, call us because we can get you out of going into foreclosure. Wouldn't you like to not go into foreclosure? Yeah. We'll come save you from foreclosure. If we save you from foreclosure, would you be happy? Awesome. Then let's get creative on how we structure this, and then they've achieved their goal. They just want to get away from this thing. Because this scenario, if you go back, right, Cory?
Sure. Yes.
Is the business partner had passed away on this. Right? They couldn't maintain, they were stuck. Anybody think that's probably an emotional decision as well? There's some pain associated with that where you just don't want it.
My question was for the investors is when you would look at a deal like this, do you have a formula where it would make more sense? I just was doing the rough math in my head on whether you're gonna wanna flip that and cash out of it immediately, or it would make more sense to keep it long-term.
Well,
because it would seem to me, math-wise, it makes it a lot more sense to probably flip that. If you're talking 20K up front, 60K to remodel, let's just sprinkle another $20,000 in for incidental, so you got 100 grand tied up in it, and it's worth 325K. You can walk with $225,000.
If I give you $500,000 right now, what would you do with it?
Myself personally?
Yeah, you have $500K. What
Probably,
in terms of assets, where are you putting it?
I'm gonna probably start buying property.
Okay, so then
Right
you're just
now,
gonna,
in
you're
my
just gonna.
opinion, we talked a little bit, I've been here 3 years now, I've watched the big up, and then I've just watched this whole, I've been through this 3 times in Southwest Florida with the extremely wild market flux.
The context of this, because I get what you're saying, but in the context of, hey, awesome, I hear what you're saying, I got this big rip, you know what I'm gonna do with this big rip? I'm gonna buy more property. Well, you already have property that's cash flowing, so it's just that game of like, why, yeah, you can take the cash, but what are you gonna put into it that's gonna generate more than, you get $3,500 a month.
Yeah, say $3,500 a month.
That's why I was wondering if there's a formula or how you look at it and break it down as to what makes more sense, whether it's to hold it or whether to cash out.
I mean, my goal is cash flow.
Okay.
Yeah, you see 2% on the deal.
Refinance on it, take the cash and rent it out, because that's a perfect bird.
Yeah.
And one other question I had with this place and property in the LLC, do the mortgage companies frown on that in a vacation rental scenario? Because we'll talk more after this, I wanna purchase my first vacation rental by the end of the year.
I don't. This is when you get into very like. I've seen, so I'm glad Chris was in here because this is exactly what happens. Because you're just like, I'm gonna ask this question. I know it's gonna go. Everyone's gonna say it. No big deal. And he's like, actually, someone got subject to. I have been in the industry 17 years. I know nothing. Anything can happen. I don't know. Like it could happen. I've seen it, over and over. Where I don't know if anybody else agrees. Where you're like, yeah, everything's possible. Like, is it common practice for people to put? If you go look at, just go pull any of the tax records for anywhere, like any street in Sevierville, and see how many are owned by LLCs. It's a ton. Or how many properties are in trusts.
Yeah, what's the concern with moving
he just asked me if the banks had an issue with it, and I don't know the answer because
You guys were
like,
talking before about the banks frowning on an LLC note, with us wanting to buy our first investment property here at the end of the year. Everything I've done research-wise states to mitigate risk, put the property in an LLC.
the way you're
But are you
supposed to
buying
do
that
it
as an
would be,
investor, or like a second home, like a?
No, more than likely what we're gonna do, I'm gonna buy a piece of property up in the Upper Peninsula of Michigan, because I go there every other weekend to snowmobile. I'm a contractor builder, I'm gonna build, I got a very simple design, I rented a cabin earlier this year, and I went, this is a moneymaker, and I'm gonna buy the property to build it myself. That way I have it to use for the weekends I want, and then I can rent it out the rest of the year and make it an asset. But when you guys had mentioned putting the note into an LLC, and possibly the mortgage company frowning on it, that raises,
Your goal should be to get the LLC to get the mortgage. Then you have to-
That was gonna be my question for you after the meeting, was do you just go into it with the
if I
LLC
could answer a
financing?
question for the room, here's the real answer, right? What you should be doing is going and getting an investor loan for this short-term rental that's not really a vacation home. How often do we see that happen? How mad was everyone when they changed the second? So it's one of those, like, I know what should be done, and now I've lived through enough stuff where I've seen the normal come back and get cracked down on. You should go get the LLC to get the mortgage if that's what you're doing.
That's
What is common practice is it's all about risk, risk mitigation, and I think that's very common for people to buy a property and move it into an LLC. But to Chris's point, yeah, like, read the fine print, talk to other people.
Yeah, and a whole nother conversation is LLC, single member LLCs don't really do anything anymore. They've been breached. There's ways around it, but it's money. Everything's just money, you can protect it.
Which might be one of the
Another-
benefits of going into a trust again versus like an LLC, is just more protection in there. And especially even in instances too, somebody passes away and you've already just got direct lines kind of laid out versus having to go back and kind of vet through the LLC and dig all that apart. Trust can be more beneficial in that respect.
I think the biggest picture of all, though, from learning this, why is everything we do on a USA Today level? What's the why? Like, if I'm very clear on why I'm doing this, then there's lots of ways professionals can help you in terms of risk mitigation. If it's, I heard X and I heard this and I'm piecing together these things, like, they're great tools, but they may not make sense for what the ultimate goal is. Yeah, does that make sense, Cory?
Yeah.
Does that make sense to you too?
No,
Yeah.
that's pretty good. And I want to kind of chime in too when you're actually looking for where's another source you can pull lists. One of my favorites actually is just go and talking to your insurance professionals, your insurance providers, right? Because somebody stops paying their home insurance, stops showing up as that's getting paid. It means the mortgage is not getting serviced, right? So if you can have a good relationship with your insurance provider and have an option for them to be able to submit you some lists through that way, it's another little bonus way to actually find some of these more distressed properties rather than maybe waiting for a pre-foreclosure list. They're going to show up immediately as soon as that stops getting paid. So,
Anybody have any success pulling the code violation list from the city?
Yeah.
So that's
yeah,
another
code
one.
violations, yeah, water shutoffs.
Yeah, there's a whole class on where to find the deals, and
Yeah.
So that we can dive deep in that one, or we can talk really detailed nerd out after we're all networking.
Yeah, one option here, kind of what we're gonna jump into here next in terms of kind of our third strategy, and also something too, right? If you're going through a subject to and your due on sale clause gets called, right? Lease options can be either way. You deed it back to them and then strike out a lease option agreement to then go ahead and still kind of take over the property. So let's talk about it, man.
Yeah, and so fullback, someone asked very earlier, just to make sure that was clear, to wrap that all in a bow, they asked about, you did, right? What do we do in terms of getting around? How does that person who's subject to it escape out of it? Hey, if you're selling a property, or even if you have an investment property, if there's a lease on it, the bank's gonna look at that as you're sole liable for some of it. They'll only count 70% of the income, but they're not gonna count it against you when you're doing DTI. So that's how they're protected, but full circle, you put the property into trust, right? You've got a servicing company in place and your service. So, lease options.
Yep.
Yes. Really cool. There's a guy, Caleb Davis, that does these. 20% of the population in his location can afford a home, right? But can't qualify for a home. So that's something where, if again, thinking about on the seller side, hey, how do I get more bang for my buck? Why are you not owner financing, lease optioning property? Here's somebody, you've got a blue ocean strategy, they can't go anywhere else. The property's worth what the market will pay for it. That is a buyer that will pay a premium for the privilege of home ownership.
Yeah.
That's a win-win, right?
Yeah, lease option is essentially just a rent to own, right? We kind of look at it, some pros, right?
Yeah, dude.
Pros for that tenant, that buyer is going to be, they're working right towards home ownership, right? They're on that path, they're on that journey. They have an opportunity there to go ahead and build up equity in a rising market, right? Because they're going to be hanging out on this property for a while themselves, and they're locking in a price and terms today.
Ooh, has anybody ever talked to American Homes for Rent? You familiar with them? American Homes for Rent is I think they may be the largest owner of single-family residences in the U.S. If not, I know they were buying like 1,000 properties. They're on some insane clip at Tampa. They'd come in and they'd buy almost anything they could. If you go, what they would do is, and this is a great play, people did this, they would have been geniuses. You bought the property, so you locked in at a price now. Your rent was guaranteed to graduate at a certain amount every year, and every year you had the option to buy the property on a 5% appreciation schedule. So it's also a cool, like, hey, if you're moving to an area, you're not sure if you're gonna stay, I could come in, sign a lease option with this corporation, and I can hedge it. If it's flat, no problem. If the market went insane like it just did, I get to buy a property for only 5% appreciation when it actually appreciated, right, 15%. So there's win-wins in all of these things, even when it's, right, like, just looking at it from a new perspective. Why would I wanna do this if I was a seller or a landlord though, Cory?
Well, you're directly just deferring over your maintenance issues, first off, onto that tenant and that buyer, right? They are fully now responsible for maintaining that property. So don't call me for no leaky toilets, call me for issues like around the property. They are fully taking over all of those maintenance issues. Oftentimes that includes like taxes, things like that. I mean, you're truly just handing it off to somebody, onto that tenant/buyer for it all.
Are they more invested when you sign a lease option contract than a regular tenant?
Yeah, of course, because they're looking to go ahead and actually buy it. It's theirs at that point. So there's pride of ownership now that comes into play on this.
I've met some people that use this as their primary tenant strategy. Like they're looking for every time to lease it on a lease option basis, because for them it works out the same way. Either I keep collecting great rent, maybe they buy it, but we get a sizable upfront. I got a down payment already where I feel I'm fine for the hassle of doing this. And now I've got someone who's invested, who's taking care. Well, you're the owner. Good luck, yeah. Take care of the toilets, take care of everything else, because it's now your property, but I still retain ownership and control over the property ultimately.
Yeah. So if they start like defaulting on this, then at that point you're just taking a property right back at that point, and you're keeping that large down payment, right?
You could also take the first two strategies of the seller finance and or the subject to, and then repackage it into a lease option.
Tell me more.
Justin wants to sell me the house at $200,000 at 5% interest. Okay, we'll do that with 5% down. Jeremiah wants to buy a house to move into, so we lock that down, turn to Jeremiah and say, okay, it's 20% down at 8% interest. You have 3 years to finance.
Yeah.
So you're making money on, it could be the bank if it's subject to, or you're making interest on the seller, and then you're also making 15% on the down payment.
And there's some, we'd even get into like wrap mortgages, and there's some ways you can get really sophisticated with it. But like the first thing is, hey, learn the basic plays, then start digging, and get honestly, go start having some conversations. Having some conversations with some real people and see how these options land.
Yep.
Yeah.
Yeah, I'm just kind of playing it out, right? Because it gives you like normally 2 different types of contract types for lease options in here. You've got your regular rental contract, and then you've got your option contract. And your option contract is going to have like a day and time frame that your tenant/buyer needs to purchase the home with traditional financing. So you're setting that up where they have that option on the first end to go ahead and actually, they have to actually purchase and close this home within a fixed time frame, right? And that could be a year, that could be 3 years, 5 years, whatever terms that you're able to work out there with your tenant/buyer.
And some of these things are, if you look at, let's say, commercial leases, often, like a lot of these things that seem esoteric, often like there's options in commercial leases. So this is not unusual. They can be very complicated documents. So this is stuff where if you're thinking of a framework of like, how is this possible? These things are being used all the time by sophisticated investors. Yeah.
Yeah.
So what does that give you, Cory, like if you've got an option contract?
Well, it gives you some added flexibility on this, right? Where you've got the option to choose your timing on this. You can actually typically charge an overly, over the typical rent in that market in it all, because some of that is probably going to be going maybe towards that purchase price or that note across that you've created. Tenants, right, will oftentimes then pay that over market rent, putting down a large non-refundable deposit, and oftentimes can pay an over the market purchase price on it all for that financing and flexibility up front now, right? Because this might be in a good school district area, just spot that they want to live. They want to live on that piece of dirt right there. So if you can give them some added flexibility and some terms in there, and then close later, great option to
Let's
have.
think about a real scenario there. If you had a property in West Knoxville when everything was multiple offers, it was impossible, and you have buyers, right, that need to sell to buy. How tough was it getting people qualified, right, that had to do some sort of a contingent contract? It was impossible. You could have totally leased option, hey, come in here and lease. Once you sell, you can execute this option. You have up to a year to execute this option. You'll have all the money, you qualify traditionally. Would it be worth it to them to pay more than asking price? And how can you get above market rent? Right, that's how it might work practically. Yeah, Sean.
Okay, some of you know, I just moved in my home in November, last November. So which scenario would I use if I wanted to get out of it right now? Or should I listen to the, could I use like a down payment assistance? They say I have to live in there for at least 2 years. I mean, are they just saying that because they have to say that, or should I just live in there for 2 years?
That does not sound like, let's talk as soon as we get done. Let's dive in that one, because I have a bunch of questions about down payment assistance. That's a wrinkle, like,
okay.
We need to look at what the terms of that are. That's a different scenario, like, yeah.
Probably put a pin in that one for
Okay.
here as we wrap up, because that's a pretty unique scenario. We'll probably have to have a good understanding of what that down payment assistance kind of
Well, they're
falls into.
saying I can sell, but I'll have to pay it back.
Pay that back.
Yeah, of
That's
course.
very
Well,
common.
and then the reason why is, so let's get it, the reason why that is incentivize, what they're trying to do is incentivize home ownership and provide that right for first-time home buyers, and not let investors take advantage of it. You're unique in that you're an actual first-time home buyer who's trying to become an investor. So you're in this like strange area, but they don't want, other people just using that program and soaking up those things when it's to make home ownership available to normal people. So, but we'll talk through like how that might work and what your options are, but I want to see how it works before. Like, typically the contracts work pretty well. I'm gonna run through these pretty fast, I think, I'll speed run those. Because I think this is all, we all kind of get this, right? Run credit, check landlord references, call references, y'all. Like don't skip steps. I know how easy it is. Like actually call all of those and have a conversation with those. You want to treat it like it's a normal rental.
Yeah.
Right? You don't want to get finessed. So you want to get as large a deposit as possible, right? And think about this is ideally if they don't have some money down, it's going to be difficult for them to execute this thing later. Correct? Right, so you want to have a large deposit if it's recorded, right? This should be able to, you can structure it whether they can count as part of their down payment in the contract, but you want to collect this up front. And you have the option, if you want to, you can incentivize that where if you close on time, we're going to credit 10% of this exaggerated rent, right, towards your transaction, because in that case, all I'm doing is moving the money, right? Instead of moving it from that monthly amount I've been collecting, cool, now I'm moving it towards my exit price there, and I've structured in a way that makes sense to me.
Yeah, I would chime in there too. And like you as the lender, right? Most lenders don't, or excuse me, most owners, most landlords don't do this, where you actually have the ability to go ahead and report these people's like current payments that they're actively making to credit bureaus, and actually help them kind of build their credit by showing that, hey, they're making their payments on time. You're helping this person kind of boost their credit to where they can actually come around and come back and actually execute on this deal. Most landlords, very rare, I haven't talked to too many that actually go out and report regularly to the credit bureaus that their tenants are actually paying on time. That's where a lot of people get stuck in that rent cycle, is because they're paying rent, and it's not actually being reported to a credit bureau. So they're having to rely on, you know, things like their car payments being made and credit cards and et cetera to help boost their credit, when simply even just like reporting their rent payment could actually help get this person out of there, right?
So, again, free things you can do, doesn't cost anything. Have a lender on hand to have a conversation with them to map out a plan to actually get this person qualified, right? So they can actually execute on this if that's the strategy, right? We don't want to be the buy here, pay here place, right? That's repoing cars every 30 days. People that we know aren't going to make the payments. Like, you're entering this in a good faith that we're gonna try to get you to have this property. Auto draft payments are possible, yes.
I'm sorry if you answered this while I was gone. Do you have an idea of what the surcharge for the rent rates is, like a normal range? And then also on the upfront fee, do you have an idea of what you said, like an exaggerated upfront fee or whatever?
Oh, two to 3 months at least, I would say. I'd want to deposit. The answer is, for me, is going to be, I don't know if it's as much as I can get.
Oh yeah, I mean, when we do those, when we, you know, for example, currently we have a house in New Mexico that she bought last year, doesn't like New Mexico. House is worth, you know, maybe $350, maybe a little bit more. Owes $330 on it, and it's rented out. And so we'll take over that, basically like a subject to, then turn around and get an end buyer in there and do like a lease option to it. And we'll look for people that are cash rich, but need time to build their credit up. And so 10-20% is what we would go for down on the purchase price. And you could also inflate the purchase price because they're buying 3 years down the road. So 1 to 3%, you know, appreciation a year, you could inflate that number to 375, you know, and work your numbers from there.
I think the realization that I came to at a certain point was like, just because, and Cory and I had this, that we ended up financing repairs for somebody, right? Made no money on it. It just wasn't, in retrospect, the opportunity cost there probably didn't make a lot of sense. Would you agree, Cory?
Yeah.
I think it just it's another scenario. I don't want to say positive, but just, it was like, oh wait, when I do this thing that no one else would do, and there's no profit incentive in it, like, I probably shouldn't be doing that, because at the end of the day, I end up not feeling happy about like being a good person. So for me, when I look at all this stuff, it's how do you compete for the best buyers? How do I compete for the best tenants? Even in the last market, it's a super competitive market. If you're an agent, it's how do I compete for the cash buyers that relocate from California? If I'm that guy, like, this is an amazing market. I love this. I'm winning all the time. Not like I'm working with whoever comes to me and I get to write 70 offers and my poor people are losing and they're miserable. That's not fun at all. So same thing, like to Vinny's point, like how do I find somebody who's the best qualified tenant for my property?
And also we'll put them in like a credit repair guy, like kind of you're saying, like a lender, but we'll use a guy to make sure like this guy could, if he does X, Y, and Z in 2, 3 years, 1 year, whatever, he could refinance traditional bank loan. And
I know a really incredible guy here. He's the smartest guy I've ever met on credit. I gotta think of his last name, the credit farmer. It's gonna escape me, but he teaches at church. You can connect him with, but I think, so what do we have there? The person that's gonna pay the most in the market, right?
Yeah.
They've got cash, they don't have credit. We're providing a solution for them, but a full solution, right? We're gonna get you in here, we're gonna auto draft your payments, we're gonna report this, we're gonna get you connected with a credit repair, like, so we're servicing you in a different way, and now it makes sense for you to pay more than the market might bear, because this is the only avenue for, right?
Homeownership.
Yeah, we're actually solving a problem there.
Yeah.
Do inspections and, you know, give them the right to decorate, but make sure they're not making structural changes before they take over. So what happens if they can't close on time?
Well, you can do you can do extensions, right? Which are probably going to have to come with some kind of renegotiation, additional deposits, renegotiating your purchase price, change your monthly rent. There's going to have to be some kind of penalty in there for them to want to stay on time and actually come through with this. But in that instance, right, if somebody like defaults, changes their mind on this, you're going to keep those deposits. You can re-rent that home. You kind of really start over again.
So if they do qualify, just keep in mind though, to the point you talked about earlier, Robert, like, hey, why would I want to do this and not just take the cash? I'm going to lose my rental.
Yeah.
So I'm going to lose that cash flow. So make sure that I price this thing accordingly where, hey, at that price at $375, yeah, we'll do that all day long.
Yeah.
Because the exit to us is worth more than that monthly cash flow, right?
Yeah, just going ahead and actually understand. Yeah, if they perform on it all, they're buying it, right? Like you're getting paid. You got to be setting that up and understanding that. Yeah, if they perform, I buy cash flow at that point, right? So just want you to understand, I guess, big picture here, that there's a lot of options available out there for buyers and sellers that we often don't really think about because we oftentimes just try to go to that, what's the traditional way to go about this? What's my 20% down or my renovation loans, things like that. So the more familiar you are with these concepts at the end of the day is going to really help fill your tool belt when you're actually going out there in the field and doing deals.
Whether you're an agent or whether you're an investor, you get solved because you solve problems, right? And I thought about this the other day, really, I was sitting down and thinking about myself. I was like, what's the problem that I'm uniquely qualified to solve? I was like thinking big picture, like Steve Jobs, whatever, right? If I figured out that's my highest possible market valuation, no matter what field I'm in, is the thing that I'm uniquely qualified to solve, right? And it's gonna work, that's a model that works all the way down whatever you're doing. It's a good framework to think about that. That's why you come here and you become more educated. The more tools you have, the more valuable you are to the people that you meet, right? And then you get rewarded accordingly. Mm-hmm. So how do you connect with us, Cory?
Well, certainly going over to finding the national Facebook group, the Grid Investor on Facebook. Please join our Grid Knoxville Facebook page as well. We're looking to continue growing that. You can kind of find us all on there as well. Finding us off of meetup.com. That's www.gridknoxville.com. That's going to have all of our future meetups, dates, times, topics. Everything's going to be lined up for you there as well.
And if you are curious about learning like these concepts, if you're an agent, if you want to, I'll send you the scenario. It's bit.ly/learn2grid, number 2 grid. That's an agent investor certification. It's a 7-week course where we go through the entire grid curriculum. There's weekly calls, and we'll walk you through this entire process from start to finish. And by the time you're done there, you will have like a working kernel, like a nucleus of an investor business, right? What's my avatar? How am I sourcing this business? What's my strategy to find it? And then be educated on every facet of those concepts. So Cory's gone through it. We've got some other folks go through it. I think it's very, very good.
Great. Yeah,
cool.
It's a great framework overall when it comes to understanding it all.
Thank you for sticking with us. We went long. We covered a ton of ground today. Anybody got any questions? Yes, Jade.
I have a question for Don right now, who's on Zoom.
Cool, Don.
Yep.
So Don asked, what percentage of owner finance deals fall through? Meaning after some period of time, the buyer defaults on the payments? Question mark.
Hard to know that.
I don't know how you would gain accurate data on that. That's not anecdotal is my answer.
Yeah.
You all agree?
Yeah, nobody reports that.
It's not a bad.
Great question. I just don't.
No, it's not necessarily a bad thing that they default. You get them
Right,
out of
because
there.
you're getting there out of there and you get your property back.
Repackage it and resell it again. You got more debt pay down. You get another deposit, maybe higher rental at that point. So
Yeah, but
I don't know how
the
to
answer.
source that in terms of like an owner structured deal. What's actually going to fall through on it all.
So in the subject to deal, when you're negotiating a debt, and maybe this is just more of a question of like when you're negotiating down a debt, is there a 1099 for the wiped out debt, and who gets that? Does the investor get that, or does the original seller get that? I don't know if the answer's straight, but it's something I was wondering about.
Great question. I cannot answer that from memory, even though I've seen it, but it's been a while since I've seen an actual short sale scenario. I don't think I've had to negotiate a short sale personally in over a decade, because there just haven't been any. But I have seen it show up as like there was tax implications. I've seen it before have tax implications, but that's a good question. I don't know the answer to that.
Yeah, I'm not sure.
If someone smarter than me knows, they can chime in. IRS always gets their chunk.
Yeah.
Any other questions? Yeah.
Yeah, I just wanna, add, I really like what you said about having all three of these tools, cause like really when you're in a scenario, it can be any one of those and just having that option to go that route. And that's been my experience is when I had, who knows how many deals I've come across where that was right in front of me and I had no idea. So I appreciate you guys talking about all this today. It was great.
Well, I was really glad Vinny was here because we wrapped this up at the end where, hey, here's somebody, like here's a seller, right? Just talked about it, very thin deal, only 20,000 in equity, 350. They can't actually traditionally sell. There's not enough room to even pay closing costs, essentially, right? They're walking away with nothing. You're able to come in, acquire that property, and then find someone else using one of these strategies, this option strategy, right?
Yep. And make money.
And make money. That's a win-win-win, right? That's what we're looking for. That's what I get excited about real estate investing when we do it correctly. Is like these are tools where you can earn a great living solving complex problems for people. Yeah, cool.
That's cool.
I know. I get excited about that stuff. There ain't nothing wrong with feeling good with what you do and making a good living.
That's a good one. We will see.
Find other deals.
Yeah, I want to say real quick, man. Thanks everybody for coming out. I want to say our next meetup is going to be Wednesday, April 5th. That's going to answer your question, my man. It's just like how to find deals, right? Prospecting, networking, marketing. How to actually find these deals, right? To then go ahead and use these tools that we kind of went over today. So look forward to seeing everybody next month. It's Wednesday, April 5th.
Jeremiah's going to bring the stats. He's going to break down cost per clicks. He's going to tell us how
Got it
TV
all.
commercials
Next month
work.
I'll be able to.
I know.
So
I'm excited for it. All right, let's
That'd be
network.
good. Man,
Who wants
thank you,
to go
everybody.
drink?